Level up your portfolio. Back the innovators shaping digital and tech realms.
Okay, amazing. So we'll wait for Austeja to come and join us. In the meantime, I would like to start with a round of introductions. I'm Olga Yaroshevsky. I'll introduce myself. I'm the managing director of Sigma AIBC brand, which focuses on the intersection of technology and iGaming. AIBC stands for Artificial Intelligence and Blockchain. Today with me, I have Vinícius Carvalho, investment partner at Ikigai Ventures. I have Mariusz Gasiewski from Google. We mentioned your name a few times today already. We have Roberto Magnifico of Zest Innovation, and we have Vladimir Malakchi of Xanada Investments, and this panel is proudly brought to you by Xanada Investments as well. Now, gentlemen, let's start with a quick round of introductions about yourself, about your investment activities lately.
I'm Vinícius, investment partner for Ikigai and Sigma. Basically, through Ikigai, we invest in iGaming and a part of emerging tech as well. One of our investee companies is actually Omni. And through Sigma, everything that is adjacent to Sigma.
Thank you, Mariusz.
Hello, I'm from Google, working with the iGaming in Forex industry in the Google side, but on the other side, I'm quite active angel investor in many projects. Additionally, I created kind of investment community of the people working with the tech, investing in different types of companies, mostly in consumer, mobile gaming apps, and like mostly B2C businesses. Mm-hmm. Even actually, I was like first investor in this company that I found actually at the Sigma pitch like last year, so yes. It's actually working very well. So.
This is actually a very good use case, everybody. I'll ask you to tell more about this a little bit later. Thank you. Roberto?
Hi, my name is Roberto Magnifico, and I'm one of the founding partners of Zest, what was originally called the Venture Group, which merged with Digital Magics in Milan a year ago. And we do early stage investing. We do pre-seed, we invest in batches, we run acceleration programs, and we are industry agnostic.
Thank you. Vladimir?
Hi, my name is Vladimir, and I'm manager partner at Xanada Investments. I think we're like pretty simple. We're investing in everything that's lying in iGaming world, helping them to grow. We have the huge ecosystem of different companies, operators, payments, traffic, platforms, and so on. So if you just think about making a new business in this industry and you have enough skills, we're here to support you and give you all the resources and money for this.
Thank you. So we have here a very interesting, diverse fields of investment. We have tech, we have iGaming, we have Web3, and we will have also crypto investment when Austeja shows up from the COINVEST capital. Now, it's been a turbulent time for the past couple of years, especially for the VC funding, yeah? So what is really driving investment decisions in 2025? I know it's been hard couple years, but let's stick to this year, 2025. Is it hype? Is it just sprinkle everything with the word AI? Is it fundamentals? Is it the long-term vision? What has been your experience so far?
In my opinion, it's a mix of both that you said. There is, of course, great value to be captured through AI, but at the same time, it is a bit inflated, and you can take that not from startup investment, you can take that from the equity markets themselves, where I think we are basically being sustained by maybe 5 to 10 companies that are within AI. So it's kind of a challenging time to predict if it is a bubble or if it is an actual value creation.
Kind of a .com thing? Yes, okay.
Yeah, I mean, I think there are a few very kind of distinct like trends. Like the first one is that I think institutional investors, like venture capital, they tend to invest at later stage, so they became more risk averse. And if you look by by average, very often the metrics that used to be enough for the A round, now they're very often even enough just for the seed round, for example. I think that's one. Second one, I think that a lot of plays taken in the past by pre-seed or early stage funds are taken by syndicates, like angel investors, like the people who are less risk averse, that are, I would say, a bit more specialized as well. Because again, if we talk about AI or like other topics, I think, at least from my perspective, it seems to me that it's getting harder and harder to invest and be kind of sector agnostic, because once I would say you need to understand deeper and deeper specific field to understand what is the projected outcome, what are the risks, how many other companies are trying to achieve similar results, what is, for example, how this AI technology is sophisticated, yeah, because it's like kind of the buzzword, yeah. And then I think the third trend is that there are a lot of more alternatives to the investment than in the past. Yeah, what I mean by that, for example, like it used to be that if you were the iGaming or like gaming or consumer app, you were raising money, for example, from investors for the product and for the marketing. Yeah. But now, because there are much more companies that are, for example, borrowing money for growth. You can, for example, raise money for the product, and then once you have the good metrics, you can just borrow that money for the growth. Yeah, you don't need even to sell your equity. Yeah, so that at least kind of the three main trends that I see.
Thank you, Roberto. From a technology agnostic point of view.
I think that we need to look at when we're at marketplaces from a geographic point of view, to be honest, because we're talking about capital availability, entrepreneurs, and exit opportunities. And clearly, yes, we're in a global market, but entrepreneurs they don't surface all in the same places or necessarily always in the US. Where you will get a bit more hype around the AI subject. For us, in Italy, Europe is a smaller market than the US. Italy is a smaller market within Europe, and therefore, you're going to have different approaches to investing in startups and opportunities for entrepreneurs to grow their business in a marketplace which is not as evolved as in other markets. So valuations will be different, capital availability will be different. It doesn't mean they will not get there. It means simply that they may have different opportunities, growth opportunities, exit opportunities that will develop differently according to where you are. I mean, clearly, if an entrepreneur from Italy then goes over to the US, they will have different opportunities there that they will not have over here. And, so as far as AI is concerned, startups are data factories, and data feeds into algorithms and artificial intelligence, and they've been around for years. Clearly, the Gen AI side of the market has been exploding over the past couple of years because of OpenAI and all the rest of them.
You actually stole my next question, because that was about the geography of tech projects. We had a very interesting presentation yesterday. We had the Sports and Tech Day, and we had Federico Smanio, who is the CEO of YLab, which is the first Italian sports and tech incubator in this country. And they actually, Austeja, hi, can you come up on stage then? We were waiting for you, hi. All right, so And he, during his presentation, he showed a very interesting global map where everything was highlighted in the LATAM area and in Asia, whereas in the middle, in Europe, it was, it was not that interesting and it was not that vibrant when it comes to investing in the sports and tech projects, but that's very industry specific. So we'll get to it. My next question would be geographical, but you pretty much covered it. Yes, Vladimir.
I think if we're jumping inside your question about like what drives exactly
Yes.
investing in AI, the only one right answer is that depends on the strategy of the fund or like investor. Because for somebody it's I don't know, it's case of diversifying money and putting, like you said, everyone like spray and pray strategy. For somebody it's like for us, we're investing mostly in AI things only if it is fully suits ecosystem, and we understand that okay, we can use this product and then this product can grow some of our value or some of our measurement points, and it's cool to have the part of equity of it because we will help it to grow faster. So it fully depends on the strategy of the fund, and if we're talking exactly about how investment in AI is going, it's very important to split iGaming, for example, from usual tech investment, because most part of the tech investment will come mostly about like capitalization part, what already Mariusz and Roberto told. The valuation is high, everybody is jumping because everybody's understand, okay, we have nothing, we have, I don't know, valuation 50 million, we will have MVP, we will cost 100 million, we will have some first traction, we will start aiming 150 or 200 millions. In iGaming, you won't find anything of this because this world is thinking pretty, I don't know, simple, how much money you can earn and when you will return investment and how this works, because capitalization part is very, very, I think, exclusionally coming to anything. You won't find a lot of startups that are coming exactly about AI and so on, coming with the huge valuations, like they make in revenue 1 million and the cost will be like, I don't know, around half a billion or something like this. It's impossible in this industry because this industry is counting real money, not just the violational IPOs that is coming and so on. We don't have a lot of this exit. We have just, okay, we will grow this project because, I don't know, some huge giant will buy it only when they have 100 or 1 million revenue, then they can buy it, and you are preparing. But they won't buy it for half a billion or something like this because this is impossible. So we now, in our industry, it's simple, how much you earn, what the value you're providing, what the average market, how much you can earn like in dynamic of 1, 2, 3, 4, 5 years, DCF, that's your price, come in, take it or leave it. Easy.
Very quick, very quick. Yeah, this is actually a good point about the difference between the industries. You stole my next question too. No, Austeja, thank you. Welcome. Please tell us about yourself and the fund and the COINVEST, and you will be covering the crypto part of the investment strategies today. So please. We have a microphone issue.
Wait, I think it's working. Yes.
Okay, yeah, it's working.
So thank you. Very nice to be here. I'm so sorry for being late. I underestimated Italian traffic.
It's the Rome
again.
traffic for you. No worries. We've been there.
Yes, yes. Yeah, I mean, COINVEST Capital is a very unique fund. It's a sovereign VC fund from Lithuania. It's a generalist fund. So one of the...
Keep it closer.
Okay, thank you. So one of the, let's say, core focuses is more on deep tech and more on defense right now because Lithuania, I mean, is a small country and has to protect its borders. So we're not focusing that much on short-term, very quick growth companies as a usual VC would. Just because the capital comes from the government, it's patient, it's an evergreen fund, so there's no expiration date, there's no pressure to exit super fast. We have patient capital which can wait for long R&D processes, which is way better suited to invest into deep tech and invest into defense.
Thank you. we've been discussing what's been driving the investments in the last year or so, 2025. So what has been the main factor driving the investment strategies at COINVEST in the crypto field?
Probably I kind of already anticipated this. So it's we see a lot of generalist funds right now pivoting more towards deep tech, and COINVEST is one of them. I think a lot of funds are getting scared of what Vladimir, right, was just talking about, and they're going towards more safer I'm saying verticals, and that's why that's the trend right now that I see in generalist funds.
What are the safer verticals?
I'm not saying they're safer, but let's say for generalist
Don't invest
funds,
in meme coins, you say.
yeah.
Right.
For generalist funds, I've seen that it's right now a lot of them are turning more towards deep tech. So.
Okay, thank you. I like the heads up about the regional, the geographical question that Roberto actually started with. So would you like to cover anything that you've seen when it comes to geographical differences in LATAM, maybe in Brazil, because we have a big presence in Brazil, even with Sigma. Is there a big difference when it comes to capital flow?
I would say yes, especially because I would say Latam is a bit late in the AI game, and Latam has its own unique problems. So still most of the capital and still most of the startups, they are aiming to solve some of those problems. So if I can list health tech, ed tech, and we have very strong examples of success in agri-tech and fintech. So those were the two main verticals that drove investments in Latam. And the reason was very simple. We are very well developed in agri-tech, so it makes sense for startups in this vertical to come up. And we are very late in financial service, so it made sense for startups to offer those services instead of big banks. But if you try to compare as into what's happening in AI across the US and maybe China, I'm reluctant in adding Europe to this bracket. It's completely different investment scenario, investment thesis, where people allocate their capital and so on.
But I think there is like a lot of different like things included. Yeah, like a lot of, for example, sentiment towards investing is coming from what type of exits were happening in the specific market. Yeah, for example, in Poland, a lot of exits were coming from marketplaces. So by default, it's easier to find investment for marketplace. Let's see, Google bought like Viz for 332 billion, this Israeli cybersecurity company. So that for sure, like if you are building a cybersecurity solution in Israel, then you are attracting much more attention than just other solutions. So I think that's one important point. Then the second one, of course, is just some regions that are just much more risk averse than other ones. Like Europe, one of the main challenges why actually there is not so much investment in really happening in Europe is just really risk averse. There was even some research done around it was kind of something similar to risk averse on the 1 to 100, where Poland was, for example, 92. Most of European markets was around more or less 90. At the same time, US was 46, Singapore was 8. So the more people are kind of eager to try out new stuff, we kind of take more risk, then finally investing is about taking the risk. Yeah? So if you do not want to take the risk, then you are not investing. And then of course the third part is really about how easy is actually to get the next round. Yeah? For example, you see much less angels, for example, in Europe versus in US, because again, it's much easier to find the next round, like next fund. Okay, you will invest as the angel and someone will invest later with more signals investing in the later stage versus, for example, in Europe, where you have much less of those funds. They are much more likely to spend and then invest at earlier stage, sorry, at later, at kind of
Later
still
stage.
relatively early stage, you have less people who want to risk early, not knowing if that fund, if that company will find enough money to exist for the next 1 year, for example. Yeah.
Can I add something here? I also, I believe the access to capital is also playing a big difference on that, as in, for you to replicate some of the AI startups nowadays, you need to have this available capital. There is a huge cost on building those companies. The most market in the world, they simply do not have the capital to throw on it. So let's put it in a parallel. The way I see Latam startup phase was first a copycat of everything that was built in the US and Europe. Then we developed our own solutions for the local market. And now you cannot copycat anymore, because for you to try to copycat ChatGPT that predicts 1 trillion of investment, you simply do not have the capital. So you need to find alternative ways or alternative business models, or I don't know, some alternative technology that you can deploy capital and it makes sense for that region.
Yeah, I mean, yeah, that's true. That's why I think like what was happening in the investment world is that either you have more some kind of niches when create something. That's why, for example, I like really B2C, yeah, because this validation B2C comes much earlier, much faster than, for example, in B2B. Yeah, you don't need to raise like 5 million to create and do some validation B2C. Yeah? It's very often it's just enough to like raise 500, 300 to see okay if it's working or not. Versus let's see if you build AI framework or something kind of okay with very high potential, but probably even to build the MVP, it will be important to raise like 3-5 million, for example. Yeah, so that's why of course all those potential moonshot ideas, unfortunately, are not really starting very often in Europe. They're starting in other regions, like especially in the US, where it's just easier to find capital for this moonshot idea.
Thank you. Would you like to add? Yes.
Olga, sorry, could you repeat the question?
The question was about the regional differences, basically what you covered in your first speech about. But you can tell us when gaming or iGaming is coming to one of your portfolios, and when you will be diversifying it with maybe more iGaming companies. Is it going to happen? I know it's a complicated question, especially due to regulations in Europe, right? But maybe.
Yeah. I mean, obviously, we operate in highly regulated markets, but I mean, in terms of the gaming industry, it's an extremely vibrant market, but it's not an easy market for investors, and not many VC investors like to invest in the gaming industry, iGaming. It's just difficult because we have a lot of restrictions from LPs.
Yeah.
So it's a difficult thing to do. We've invested in a few gaming startups in the past, but we really have to keep track of that metric there on behalf of our LPs in Italy.
Vladimir, from someone who actually invests in iGaming, actually I would like to cover the question of how would you identify these good startups early, because you often take part in the startup pitch competitions, especially on our stage, and you will do so in a few minutes. And you're always like very straightforward, and you kind of ask uncomfortable and hard questions. So when you're looking at early stage startups or companies operating in both tech and gaming, so what signals actually convince you that you need to make that investment?
There is a very nice description of our sixth sense. There is a kind of theory that our sixth sense, we're not using 100% of our brain. We're using only maximum 10% if you're lucky enough. Usually, I think a lot of people are using only one. So I mean, in most part of theories, this sixth sense is given the whole information that's inside your head, that your mind, undermined, is analyzing everything you're seeing around before you even think about this. And if you have enough information, like answering your question, if you have enough information in the industry you're investing in, you know deeply what are you talking about. You know, like, I don't know, benchmarks, markets, how problems of the markets, people of this market, and so on, so on, so on. It's given you enough background to feel that the person is telling bullshit or the person is telling good things. Yes, of course, like, you need to change numbers, you need, but if you know enough deeply and you're always trying to be up to date what things are going around, and when somebody is coming and telling me, for example, like, we have payment in this market, everything working, we have, I don't know, ratio of 70% on FTD, and I'm telling guys, sorry, but like, I know that this market was dropping down like yesterday, because I know top 5 operators from this market, and we're speaking with them like each day. And everything you will tell me about this, you will 99% it lying, or you're not very deeply analyzing, or you're just playing with the numbers, which is okay as well. You're nice to play with them. So, I mean, like, asking non-comfortable question. It's my approach in the whole life,
It's
because
essential, yes.
yes, it's not about like I'm trying to, like, I don't know, to abuse somebody or something like this. It's my style of living, but in exactly pitch decks or through some communication skills, if the person is answering this uncomfortable question pretty understandable with analyzing, you understand that the person is really deep, and this is the good signal to speak with this person, like, about anything about his business or her business. This means that the person deeply understanding, I don't know, competition market, numbers. So for me, it's very, very big green flag to continue speaking. If you're asking something out of the pitch and founder is just lost himself or herself, I think this is the end of discussion. No sense to discuss any next steps.
I hope everyone is taking notes, yeah?
And this is, if I may add, this is very important early stage investing, because clearly there are so many criteria that you can look at, and so many objective criteria that you can start mapping and collecting. I mean, we see hundreds and thousands of pitch decks and startups, etc. And of course, you will take all that objective data into consideration. You'll use algorithms, you'll use artificial intelligence, but early stage, you really need to look and have a hard talk with the founders at the end of the day to be able to understand whether or not, and we've made mistakes, and everyone talks about famous anti-portfolios. I mean, one of our best exits was into a startup into which I did not want to invest, for example, because I was not, I mean, I liked the business model, I liked everything about them, but I was not convinced by the founders. And at the end, we said, okay, well, let's invest. And, you know how much you're going to lose. You don't know how much you're going to make. Okay, you don't know what the upside is at the end of the day with all the data you get.
What is a fundable founder for you, Austeja?
Great question. I can expand a bit also on the geographic differences, because I feel like most of the investors that I've met from the US, if the way that they would answer the question you just asked would be they're looking for those outliers, but what I see is that they're looking with a very positive outlook. Like when you go to the US and you're pitching to the investors in the US, they are trying to find reasons to invest, like 100 reasons to invest, and not looking, they're hoping and projecting the reasons to invest. Whereas European investors, I see they're looking for those 100 reasons to not invest when assessing startups. So there's this kind of also mindset, the way that they are approaching the startups, which is a difference, and also an answer to what's a great founder. And also I see, I mean, we work a lot of business angels at COINVEST, and I see Europe getting a bit busier, getting a bit more open-minded. Last week, I went to European Commission to speak in the European Angel Summit, and they're trying to implement a very similar thing that we're doing at COINVEST, so incentivizing business angels to invest with asymmetric profits, which means our fund is capped at 8% IRR, and all the excess profit is redistributed to the business angels. So they're trying to do this now on a European level, and I think it's just a great way to, I mean, what's a better way to incentivize people to put their money in a risky asset class than asymmetric returns, no? So exactly, so they're trying to make this on a European level. I'm very excited for this. Hopefully it works out. I see a lot of, I mean, I'm involved in many communities, both in Milan and Lithuania, Vilnius, and both of these regions, I mean, far away from each other, but both of them, I see the spirit of everybody waking up and wanting to build more, both between younger people and with investors wanting to invest more. So.
Now, we're almost out of time. I have like a quick fire 3 questions for you. 10, 15 seconds to answer each one, all right? So first of all, if you each had to invest $10 million, no committees, no decks, what kind of company or which founder would you back?
Sorry, can you repeat?
If you had $10 million to invest, what kind of company would you back? What kind of founder would you back?
Really early stage, I think I would bet more on the founder and the experience on dealing with the problem. Not exactly sector or anything like that.
Okay, good one. Mariusz?
Yeah, I mean, from my perspective, it's exactly like founder and the team, especially like what his story, why he's building that, what is his more objective. He's really passionate about what he's building.
Yeah.
What is, of course, his experience, what is his vision to really do from that. Yes?
It's a human factor for you. Okay, Roberto?
Now, again, for me, it's an issue of if the founders can demonstrate execution capability and a learning mindset. Okay,
so it's again a human factor. You would not want to invest 10 million to a, I don't know, an AI customer service.
Well, I mean, AI is everywhere.
Yeah, I know.
It's everywhere. So
okay.
Obviously, I'm going to say AI, but it's everywhere.
But that depends on a founder. Yeah, Vladimir?
I think first of all I will split it to lower checks. So usually it will be like between $500,000 and million, so to invest at least like an average 15 startups. It's easier. And then like these startups will be exactly, again, from my perspective, it will be iGaming projects, and it will be founders that at least has experience in exactly what they're doing, and again, trying to diversify some operators, some kind of providers, probably some traffic to support everything of this, and the main founders which are at least have like 2-3 years of experience what they're doing, and they continue doing their startups in the same niche they were working for these last years.
Okay, thanks. Austeja?
Completely agree on all the points that the speakers made, but one thing I'm also looking in specifically in young founders is hunger. And this is what I see in Lithuania. The founders are just hungry to build. I feel like a lot of Western Europe, a lot of people here are very comfortable in the lifestyle they've been living in for the past, I don't know, 30, 40 years, whereas Lithuania was just a country that was being built. And it's the younger generation now that are innovating and building. And I see this hunger in their eyes for this kind of building. So that's what I'm looking for always. And also just basically someone very determined with that kind of hunger will make any company go to the moon.
Okay, thanks. And one more quick question, but keep it 10 seconds, okay? Which trend you wish investors would just stop chasing right now? What?
AI.
AI. I knew that. During the AI day. Sounds perfect, yeah?
I think there is nothing to stop chasing by. This is mostly like stop doing bullshit just to put the word there. And that's all. Like if you're fully confident that you're doing any of trend, doesn't matter what the trend it is, and you're confident that it is needed there, just continue doing it, and even don't listen to all the investors. If you're confident of doing this, continue doing. But if you just put in anything just to put some good word because like investor will love you more, no, it's not working like this. Like stop doing this.
I think I would stop a little bit this chase after this later stage investments, because it's kind of wishing circle. Like you you invest late, so your multiple is low, then you finally, your outcome is not very high, and finally you have less motivation to invest, yeah? So especially in Europe, I would, of course, encourage more earlier stage like investments, because they really create real value.
On my side, is it working? Okay.
Yeah.
Don't stop putting your money to younger people. Give them the money to build. I mean, I don't think there's any trend, I agree, to stop chasing. Just allow people who are born to build, hungry to build, let them build, trust them. Maybe they will fail the first time. Maybe they will fail the second time. That money is better used, given to younger people than stuck in bureaucracy that we all live in. So let's give them the money to build, and maybe in the third or fourth time there will be a unicorn for Europe.
All right. Thanks, everyone. You're not leaving the stage because I have a quiz for you ready. I will ask my colleagues there to pull up the quiz questions. So it's not exactly a quiz where you have right answers or wrong answers. We're going to have several questions, 1 minute each. You will give your answers to it, and then we can discuss, yeah? Are we ready? We are ready. Okay. No, that's not that one. Okay, almost there. While we're getting ready, what's one quick piece of advice you would give to the startup pitch contestants that are coming up on this stage later? What would you advise them to do? Or not to do?
I would say just be ready, come with hard data of your company, and face this as not a competition, just face this as you're presenting your company. When you start to add the pressure of I have to be better than the others, and so that's, I think, when you get a bit too nervous in a presentation.
I mean, from my side, I think look at the perspective of the investor who is looking at many different ideas at the same time, and think what is really something that is distinguishing me, what is something that is really decreasing potential view on my risk related to me. So I would really again, I think not enough startups are looking by the lenses of the investors.
Yeah, I mean, at the end of the day, make sure that whatever your business model is about and whatever it is that you're trying to build, to make sure the story is a succinct story. Okay, don't add a lot of details to whatever you're trying to build or describe. Just get straight to the point when you're pitching your stuff.